Okay, everybody, let's get started. I know that there might be a couple late arrivals, but it's okay because we'll just have this recorded and we'll post it later if you want to review it as well. So, everybody, welcome once again. My name is Max Fuller. I'm a co-founder and senior account manager at Everest Markets. Here today, welcoming Anil, who's a trader that I met in Russia. I think that his techniques are extremely well developed, and he's extremely focused. So, let's get started. Real quick, I have posted this disclaimer. This is an education-only webinar, so please do not associate Everest Markets with any trades taking place on the platform. So, a firm overview. I just want to introduce a couple of you who are new to Everest Markets, what we're all about, what our ethos and our strategy is. We're an online broker trading in Forex and CFDs. 99 to 98% of all our orders are ECN orders. So that means that we're fully transparent with just the commission shown and no widened spread, just the raw market rate. Very few requotes with 99.98% with no requotes. We have just reached our 1,000 active trader level, being a new firm only launching in 2012. We like to offer 24/7 support to all our traders. We have a support line that everybody can call. If you have any questions about orders or your account at any time, you can call that. We'd like to be present in a couple places around the world, notably in London, where I'm based, Geneva, where we have another office, and in New Zealand, where our regulation and all our legal compliance work is done, as well as a small sales team. So, education. So, the reason why we're doing this webinar is really to give everybody an insight into trading. We want to increase your knowledge in trading by offering webinars such as these. If you are interested in having more of these webinars, please express your interest towards us. You can write a message in the chat. We'll run a poll after the webinar is over. We might be able to do this on a daily basis, even if not weekly, for getting a market insight and really just gathering together in a community to find out what's happening and how we can make some profit from it. We do also offer education videos in an ebook, some demonstrational videos about how to use MetaTrader, how to use our platform, and a bit about the market and how to get started in the market. We will be running a seminar, that means a seminar in person, towards the end of March. Now, this isn't confirmed yet, though we're just in the final planning stages of finding a location to have it done. This would be a live event where you can come and meet our team and even have a nice social occasion, really. We do offer right now live market news, so that's live Bloomberg TV right off the website for all traders, even demo accounts, and an economic calendar, as well as other market news coming in straight to your MetaTrader if you like to trade off a fundamental side. Though today's presentation is all going to be about technicals, and I'll be introducing Anil in just a moment, who really knows what he's talking about much more than I do. So today's webinar, as I said, introduction to technical trading, introduction to Fibonacci's and retracements and stuff like that. We'll be looking at the euro dollar for the next week ahead, the Aussie dollar, the cable, a bit of silver. We'll just touch upon that. And we'll end up with a question and answer session. As I said, if you have any questions at any time, write in on the questions on the GoToWebinar screen on your right-hand side. So let's begin. What I'll do is I will now pass over to Anil, who will share his screen with you. Again, if you have any problems hearing him or me, or if you have any questions, just let us know. So welcome, Anil.
Hi, Max. Can you hear me?
Yes, I can hear you. Okay, so let's bring you on here. I'm going to change.
Okay, good afternoon. Just put the present room. Okay.
Yeah. Okay, just switching the screen over to you now, Anil.
Okay.
There you go. All right.
Yep.
Good. I'm going to mute my microphone.
Good afternoon, everyone. Yeah. Good afternoon, everyone. Can you hear me? Just type yes in the box if you can hear me and you can see my screen. Somebody just type yes in the chat box so I can know you're seeing the screen that I'm on right now. I'm not sure if anybody. Okay, good. Okay. For all the traders who come in there, you can actually type your questions in the chat box, and we will answer them. So what we're going to do today is we're going to as Max explained, this is the first webinar of its time, so it's kind of an introduction webinar. What I plan to do in the future, if there is enough interest in the market for people to look at this, we will look at a series of training courses. Or we'll train in the structure of the market. We'll teach the structure of the market, who are the players in the market, the way the market moves. We're going to use some of the instruments. We're going to look at Elliott waves, Fibonacci, candlestick formation, momentum, supply and demand. So we will do one class for each of these topics in the future. What I'm going to do today is introduce you to how I look at the charts and what I look at. I'm going to look at some of these currencies as we go. So let's go right into that immediately. This is the pound chart I was trading today, so I'll just show you guys a very quick thing. So what I'm going to take everything off the charts, remove all tools. And if any question comes up, you ask me. So we will start with the monthly charts. What we looked at, what is the chart right now? What is the chart? What does the chart looks like? Remember, today we're going to just look at the charts, try to figure out what is in the charts, and how I trade them, what I look at when I trade. Some of the instruments I use. One of the things you'll know is I have MACD on. What I do, this MACD, you can actually use, some people use RSI, some people use awesome oscillator. It doesn't matter what. It's an indicator that tells you when you're having divergence, when momentum in the market is dying out, when volume is ending. So that one I use very often to give me that. In the weekly charts, we look for direction. So we can see very clearly, let me just get this type, this is drawing tool. We can see we're in a monthly wedge. Very huge wedge, right? A wedge like this normally breaks to the downside, right? We will study candlestick formations and we will study the patterns in the chart and what they do, right? What I'm doing, I'm going to run through very fast, show you what I see. The patterns, this is called a contracting wedge, and we can see that it's going to break to the downside. It's a 2-hour class on candlestick formation that we're going to do. We're going to go through all the formations. We're going to do everything that there is to do with it. Let's go to a lesser time frame and look at a weekly chart. Right now, we can see that in the weekly chart, we're actually made a top there. If you pull this across there, and if you pull the bottom, we're coming back to the bottom. We'll just pull this from here. So we can see we made that. This is, if you put it in a daily, somewhere where we start actually trading. We put a single line trend line, a break of that. Single. So as of this moment, candlestick formation would have showed us a downside, right? You call it the doji, kangaroo tail, it doesn't matter what we call this, right? It's a wick. Right? One of the things you're going to learn here, I'm going to do a class especially on the myth in the markets. There are a lot of myth in the markets, a lot of guru sells all kinds of EOs and whatever else they want to sell you, some kind of strategy or so. We are not going to do that here. We are going to be here to gain knowledge. There's only one way to really understand this market. It's studying the market, having the real knowledge, and being able to trade with the knowledge. Not some kind of a robot, some kind of a, you know, if those things very clearly, so you guys can understand, if those things were working, the hedge funds would have been trillionaires. They have the money to buy them, they have the people to do that, you know, so it doesn't work. It's very simple. It works for a time, maybe for a period of time, maybe for a short thing, maybe, I don't know. If it was working very good and somebody created one, they wouldn't sell it to you for $400. So let's get that very clear. The basic thing we're going to give you here is knowledge. Knowledge so that you can trade properly. I'm going to share the knowledge I have with you so that you can trade. I'll be willing for you to ask questions and share your knowledge with me. So let's go. I'm very big into fibs. They work extremely well when you use them properly and you put them properly. So what I do, at this moment, we identify a downtrend. At this very moment, we identified a downtrend in this channel. Every now and then, I'm going to pull up a chart to show you some of the times when I take charts, when we make forecasts. When I do forecasts. These are the chart patterns that I'll be sending to you. Even be posting these up so that you can see what we see in the charts and what we are expecting in the chart. This was a moment when we identified this downtrend. It's a daily candlestick. We said if that stays under the trend line, closes there, we're expecting the start of a downtrend. Very clearly. So if you're in the group, we're going to create a group with all the traders who are interested on a forum or on a Skype group. I like to do the Skype group because that's effective. You get an immediate answer to whatever you think. If you have questions, I can answer you immediately. So I'm going to create a Skype group, put all the traders in there, and I'm going to post these on all time frame, daily, 5-minute, 1 hour, 4 hour charts out every day, so that you guys could have a very clear view of what I see. Remember, I can be wrong. So you look to see if you see what I see. If you see something else, you can always contact me. Say, well, I didn't see that. I see something else. We look at it. Everybody see every trader sees something in the chart. How correct he is a big question. So this is what I will use the fibs. I'll grab the fib here. This is the first leg. We will count Elliott wave. So I'm going to show you how I do this and what I do so that when we start the classes, we're going to do. This is the first wave down. We made a pullback to a fib point, and we're looking to go to the fib targets. First target is always the -270, the 618, and these targets will remain here as targets we will go to. Right? You want to take part of your trade-off here. As we go into fibs very deeply, I'm going to show you how to use the fibs for entries and where you exit. How do you make this trade? So this is a daily chart. We see that we've just finished a third wave, a very impulsive third wave in here. So we can, on a daily, we can put the fib on. We don't really trade the daily, but just put the fib on so you have an idea of where we're going to start. The resistance point, 382, 500, 680. This is just one element in the chart that we use. One of the things I'm going to show you how to put all of them together, counting the Elliott waves, adding the fibs, using support and resistance, using supply and demand, and putting trend lines to figure out where are we in the chart at any moment. So we can see that we are probably in a huge downtrend. Could this be, just for a moment, could this have been an A, B, C? It could be. So what are we going to look for? Is this a corrective wave or is this going to be an impulsive wave? That's the first thing we look for. The nature of and the structure of the market, of the waves, are going to tell us what are we doing right now. So if we had looked at this part of it, we would have seen that this is an A, B, C. And then we made a next A, B, C. So you can immediately know that you're going to make a C wave up. This would have been an A, a B, and you're expecting an impulsive C wave up. It could be a 5 wave, it could be a 3 wave. On a lower time frame, you will count the waves in it. Right? So we made a 3 wave up, and we can start expecting the downside. The real time when you really want to trade the downside is from here. The confirmation that we've broken the daily trend. We make a pullback to test the trend line, and then we're going, right? So you should start be a seller from this point, going down. Every trade after that is a sell. So what are we looking for? We're making a very big pullback. We don't know as of yet what this is. This could be a turning point, or it could be. So we will look at it at a lower time frame. That's what we look at. 60 minutes. And you check. So we can see that we just make an impulsive breakout of this channel here, right? You're a buyer on the break of this single, on the break of this. On the break of that, you're a buyer. Every time you break a structure in the market, you're going to come back to test that. That's the point of equilibrium. One of the classes we will do. Remember, each of these classes are going to take a lot of time. This is where you start being a buyer. Every pullback will give you a trade to the upside. So let's put a fib on that one and see where are the targets. Where are we going to? We start fibbing from here. Right? This was a retracement, a testing of the trend line, and you're looking for a 618 target, 270 and 618. Your first target would have been this, 270, second one 618. After that, it put back. That's how the fibs work magically. So we're going to fib the next one. We're still looking for the same thing, 270 and 680. We are at the 270. So if you were looking for this off the trend line, this trade off the trend line and off that, why is this trade a very easy trade? I'm going to go to a lower time frame so we can see this very clearly. We're not gonna add on to these. We could put these on, but we're gonna use all those oscillators or whatever else we want to use on next webinar where we can assimilate this. As of now, we're just gonna look for the fibs, how they work on the chart, right? More today we're gonna do on fibs. Basically, we're gonna look at all of those together, how you use them. So a retest of the trend line back to there would have given you a very low risk, high reward trade. What are we looking for? We could have taken this trade from the test of this from the top. We broke the stop here, right? So what are we looking? Impulse move up to the 618, 270, 680. That's our target always. It's a 270 and a 680. So we're at the 270. We can expect a retest of this structure. We just broke out. A retest of this structure back to a fib, and then you'll be looking for that move up. So let's go to 10 minutes and look at that trade. The fibs are going to work on all time frame. Every single time frame the fibs are going to work on. So we'll fib this one. Retest to the 50 fib. 270. We saw that they had some weakness there. 680. We're getting some weakness here. These are if you're trading the lower time frames. The same thing you're going to be looking for. Breakout trades. You can trade off the fib, you can trade off the breakout. And you're going. So we are expecting a retest. What I'll be looking for is a retest of this area here. So I want to see it make a top. We're not topping out as yet. We need to make a top. One candle is not a top. That's one of the things we've been looking at. Candlestick formation. And we can see that the MACD is still showing power. We need this MACD before you can top out, before you look for a pullback. You look for the MACD to start giving you that, showing you some form or reduce in momentum in the market. And then we go. So we allow this to finish. This is not a trade you want to get in now. Allow that to finish, make a top, make a pullback, fib it, and then you wait for the trade, for the entry point. You're buying at the low, and selling at the high, right? So let's see this. Go back to the 240 now. Where can we expect market to go on a bigger time frame? So there are two ways we can look at this. There is a bottom here, resistance point. It's also the 618 retracement of this leg, right? So we're looking. First, we have a retrace. We have a very strong. Let me just put them on. We have a resistance point there, and we have a resistance point here. Okay. We're looking at those two resistance points. If the market is going to bounce off there for the downside, it's going to bounce off this one. Now, when do we start to become a seller? Right now, we are actually buyers because we're going up, right? We are a buyer in a counter trend trade. This, as of now, is a counter trend trade because we're in a bear flag formation, a very tight channel. We just broke out of the channel. So what we want to see is a retest of this area here, right? Gave us a retest, and then we'll be looking for the trade up. If it comes back in, very volatile. If it comes back in, makes a test back to this thing, and start to go down, we will start be sellers on the break of this trend. Break, hook, and then we start to look for the sell. We will become sellers only after we've broken out of the lower trend line. As long as you're above that trend line, as long as you're above the trend line, you're a buyer. You want to break. I'll make this point very important because these are going to be very important points. You want to break, hook, and then go. So how would that look like? What would that look like? It's going to look like a break out of here, hook back to the trend, test the trend, and then start going. That's when you want to be a seller from here. I hope that's getting clear, right? If you guys can see that, I hope everybody's. If you have questions, type your questions in. I'll run through this chart, show you the instruments we're going to use. Basically, very basic. You don't complicate this. thing. You keep it very clean, you keep it very nice. Now, we're going to anticipate where it's going to go. And if the structure of the market is showing us what we anticipate, what we forecast, or what what we're looking for, then we take the trade. The structure of the market can change at any one point. There are a lot of things that could change the structure. If the structure change, we stay out, wait for something that is showing us a formation that we understand. Okay, we have a question. How much of your initial trade would you buy, sell after reaching your fib targets? How much of it? Are you asking if I'm gonna sell part of the trade and leave part on, right? Or are you asking what percent of my trade am I gonna do I enter? If we're gonna do this, here's that's a very important question. If the question is based on money management, that's a whole class we're gonna do. I never risk more than 2% of my account. Open risk. Any open risk is never more than 2%, right? But if I'm adding on to trades, right? If I'm adding on to trades when I'm in a trade and it's going my direction, you can add on every time you get a pullback and the trade is still going in your direction. You can add on. We're going to do a class on that as well. If you want to exit part of your trade when you hit the first target, you can take out 1% of your trade, move your stop to +1, and allow the trade to go, right? How much would you exit with? It depends on how much you're in the trade with, what percent you're in the trade with. Here's the thing: I like the risk very small. I'm very conservative in the trading. I don't risk 10, 15%. I risk 2% on any trade at the start of the trade. I like to break up the lots I'll be going in with into parts. So you can always start the trade with one part of the lot you would like to trade. Your risk, what's your risk? 1%, 2%. If you're risking 2% on the trade that you like, you break it up into 2 or 3 parts. You start the trade with one part, right? That would be probably, I don't know, 0.7%. And then as the trade progresses, if it's doing what you want to do, if the structure of the market is showing you what you're looking for, you add on to that as you go. Because remember, the structure of this market could change anytime. As a percentage of my initial trade, if I'm in the trade, if I'm in this trade, if I'm in this trade here, particular, let's say I've started this trade from here. If I've taken the trade from here, off the trend line, which will be a trend line trade, that's a strategy as well, right? Taking off the trend line trade. I'll be starting this with a very low, 0.5%. Why? Because at any one time it could break through that trend line. So I will start this as a high risk, low percentage trade. If it proves my trade and it's coming up here, it makes a pullback. Here is where I want to add on the next 0.5% of the trade. As it goes, my stop all move to this level. So when we are above here, here is where we want to add on to the trade again, right? The next 0.5%. When it hits here, I want to take off some of the trade. I want to take off at least 1% of that trade. 1.5% up, I want to take off 1% and let the 5% ride if it breaks. Because here is a point that it could totally turn. But if it turns, my stop would be here, just above or just below here. Depends on where I find a pivot on a time frame. So if it breaks and it comes back all the way down, which I'll be looking for formation to sell, right? If I see that a target was there that it hit, if this 270 was sitting here and we hit that 270 like this 618, like this, the 270 was here, the 618 was here. When it hits that 618, this 618, when it hit that 618, there are 90% chance, a 90% chance that that thing is going to give you a huge retracement on any time frame. We're going to go back to the 240 time frame so that you see what I'm talking about. When you hit the 618, there is a 90% chance that that thing is going to retrace. So when you hit, if you're in that trade on a very long time trade, if you're a position trader and you're taking that trade in a position trade, when you hit this, you start exiting your trade. Of your trade, 80 to 90% of your trade would be exited at this 618. Because that's a place where if you know fibs, 90% of the chance they're going to turn the market. actually and first hit that. See that? They pull back immediately. Hit it the second time and you got to pull back there. So that's why you want to exit your trades. You move your stop as close as you can. You move your stops as close as you can. And if the market goes through, it goes through. If it comes back and take you out, well, that's what the market does. You really don't want to take your trades out physically unless the structure of the market has changed. If the market is still doing what you want it to do, you want to move your stop and stay in. Because you don't know. If it takes you out, it takes you out. But if it goes, and I mean, all of your traders, you've seen this many times. When the market just keep going, if it goes, you want us to be in. Let me see if you have a next question. Yep. News could definitely break the sequence. Here's how I look at the market. And if when we start doing the structure of the market, which would be a 3-hour class, you're going to see. News drives the market. The market moves in a very organized structure. So if you look at the market as a car, the news is the gas. It drives the market. It doesn't give the market directions. The market is going to go in the direction that it has to go. Good news, bad news, they're going to drive it. Bad news is going to drive it in the opposite direction. That doesn't mean that the structure change. It simply means you're going to get a retracement. If it's bad news and if there's good news on the pound and we are going down, if the trend is down, good news on the pound, you'll get a retracement. The retracement finish, it's going to drive down back. It is going to go down back. The structure of the market is well organized. The news events, they're going to create. They may, this might have happened in a very good news event for the pound. But are we expecting that to happen? Are you expecting an ABC correction in there? That's the most important thing. If you understand the market and you figure out what the market should do next, you know what to expect. And if you know what to expect, the news is going to help it. The news is going to drive it. The news could change the direction, but then if you look at the structure afterwards, it's probably going to fit into a bigger time frame very nicely. The best way you want to do if you're a retail trader, when the news comes, you're out of every trade. Let the news do what it has to do. Let the market move. I am not a fundamental trader. Let the market move. Set itself up in the structure, and then you trade again. If the news is going in your direction and you can see it while it's happening, give it some time while you can trade it. Trade it. But I'm not in the process of guessing the interpretation of the news. You see, here's the thing: the market makers will interpret the news. They will interpret the news, and based on their interpretation, they will move the market. Now, if anyone knows how the news is going to be interpreted, they're going to be very rich, very, very rich. If they knew how to interpret the news, if they know how the other market makers are going to interpret the news, right? So since we can't predict that, since we don't know that, we shouldn't be in the business of predicting. You know, we should let the market makers do what they have to do, and then we follow. We follow the technical part of it, because what is it? It's going to reflect. Everything that happens will reflect in here. This is a statistical collection of data. So whatever are the data, whatever which direction they're going to move it, we will see it and we can get in and follow it. Okay, there's a question from Oliver here. If it wasn't clear enough, we can go through it again or after. Okay, yep, we can do that. Each one of these things that I'm talking about, we will do a 3-hour class on them.
I know that was me actually. I just replied to Oliver, just letting him know that if it wasn't clear enough, we would go through it again. Also, there's the chat area as well while I'm reposting the questions. I don't know if you're getting the questions straight to.
No, I'm not seeing any questions. I'm only seeing your questions. I'm not seeing questions from the trader.
So I'll vet them.
That's the problem. Okay, guys, I don't know if anybody's asking because I'm only seeing questions from Max.
Don't worry, I'm reposting them. I'm reposting them. Don't worry.
Okay, good. Okay.
There we go. Okay, I'll let you get.
So I may have missed some questions. So let me go through very fast and see if I've missed any questions. Okay, good. I've seen that. I've seen that question. seconds. Some news. Yeah, news. I have answered that. What do you base your stops on? Volatility. No, my stops are based on their technical stops, technical pivot points. So it depends on what time frame you're trading. If you're trading a 60-minute time frame, look for a technical pivot point. Where you put your stops. You put your stops behind the last pivot. That's how I use it. If it's the 60 minutes, a 60 minutes. It's a 5 minutes, a 5 minute. It's probably, if I'm 5 minutes, I go to a higher time frame. If I'm trading the lower time frame, I'll put it under. Most likely, if I'm trading under the 60 minute, I'll look for a 60-minute pivot. If I'm trading above the 60 minute, I will look for a higher time frame pivot. So if I'm trading a 5 minute, let me do it very fast here so you guys can see. Go to 10 minute. So if I'm trading this, if I'm trading this as a 10 minute, if I'm trading this one, if I take the trade here, this will be my stop under this pivot. If it comes back, if it goes here and just spiked a little and come back, I want to be out here because the structure will change. If I'm taking it from here, my stop would be clearly just under the trend line. This is a trend line trade. That strategy is a trend line strategy. So it's a high risk. It's a very high risk that this thing could break, right? It's a very high risk trade, but you have a very small stop on it. It's a high reward trade because your stop is very small, but the rewards can be very big. So if you get 4, if you trade these trend lines trade, right, and you win 4 out of 10, you will be in profit. If you lose 6 out of them, you will be in profit. 4 out of 10 is enough to get you in profit because the risk to reward is like 4 to 1, 3 to 1. That's the minimum. So anytime you're taking a trend line breakout on any time frame. Any more questions? Let me go through the questions and then we'll go look at some charts. Let me just keep track of the time. I have to really keep track of the time because I can talk about this nonstop. Right? I trained some people who's been with me for a long time in London classes, so they know me very well. Why some markets move in the same direction before the news is it's very simple. It's very simple why they move markets before the thing. All the market makers knows that traders, basically, not only retail traders or you know middle tier hedge funds or so, they will stay out of the market before the news, because when you're in the market, they will go get your stuff. So the market could be very volatile before the news. They're just picking stops up. Those who like to saddle, those who like to assume that they know which direction the trade is going to go in, the market is going to simply do this. Here is where it is. Before the news, they will go up, down, and they'll come back to an equilibrium point. That's when we're going to do equilibrium. So YouTube tonight. Okay, yes, that's what. Can we get a copy of the recording? That's great. So okay, let me show you guys this. Let me see if I can pull a clear part of the chart so that a very clean screen for you guys. I'll show you this pattern. Here's a pattern. The market opens, it goes up, it comes down. They set a high, they set a low. And the market consolidates in between there. This is called accumulation. For bankers, what they're doing, they're accumulating trades. They're accumulating buys and sells. If you want to be a buyer and seller in there, they're accumulating. Actually, it's called interbank transactions. That is what is happening here. Interbank transactions, where the banks, bigger trades, are actually uploading trades onto their platform. They're actually onto their computers. So transactions, the bank will keep this price intact. It means that there's anybody who wants to buy and sell interbank, into bigger funds or whatever they do with each other, the price will be within this area. It's not going to leave that area. If you want to jump in there, they welcome you. What they're going to do, if you're a buyer or you're a seller, it doesn't matter. They're going to move. If you're probably a buyer, if you think it's going to go up, you'll put a stop under here, most likely, right? If you're a seller, you'll put a stop there. So they will expand the market. Take those stops out. Pull you in the trade and take your stop out. All right, they'll pull you in the trade, take your stop out. And then they're going to shift the zone. They're going to move the market in the direction of the trend. So if it's a downtrend, you will see something like this. Consolidation, up, down, consolidation, up, down, right? Then you will see a spike goes up, the market comes down back, clear all the stops, comes down back, make a next second spike, and then leave, right? Very easy. So we're going to go look for that structure in the chart. See if we can see that in the charts. So let me see if I can pull back the charts with the auto. Sorry, not that. Auto scale. Get back my charts. So here's what I'm going to show you. We're in a dump trend. They come up and they consolidate. Spike up, spike down. See that? Everybody who are buying and selling in here with stops above here and below here, they got whacked there, they got whacked there. Market move up back, get rid of the rest of the, what they do. When some people like to do what? Breakout trades in a consolidation like this. Consolidation like this, you want to buy in here. If you buy in here, that's your good luck. You don't buy in the consolidation. Buy out of the consolidation. When it break out, you buy here. They take you in that trade. If you're trading this time frame, you need to know where you need to get out of the trade. Right? Is that a place to get out of the trade? Let's see. We put a fib from here to here. Swing high, swing low. Should you be out of the trade? Is the fibs working? What is your target? 618. If you don't know that you should be out of the trade here, this is what's going to happen to you. Your stops are here. That's it. They just took your stop. See that? If you don't know that this is your target, if you're trading this time frame and you don't know that that is your target, you're in trouble. This is how fibs work. Perfect. Every time. They're just perfect every time. Right? I've tested these fibs millions of times on all levels of the chart. They're perfect every time. So if you want to trade a breakout like that, you need to be out here. You take the trade from here, and this is all you can get. Don't expect this to go. If you expect it to go, you're looking for trouble. If you're trading the fibs the other way around, if you're trading this leg to the downside, see that? Your stop will have to be above there. See that? Above there. They never get it. 618. What is your target? If you think, what's your target? 618. See that? 618. What happened when they hit the 618? A little spike down and then they go back. They go back into consolidation. Right? They move the market after this. This is what I was showing you guys. Consolidation, spike up, spike down, a next spike, hook, and they move out of the zone. This was the zone. 58, this was the zone they were in. 57, 58, they move away from the zone. This is the zone they're in now. They do when they move away from the zone, they go back into consolidation. Spike up, spike down, move up, come back down. They're out of the trend line. So what we're doing? We're doing higher level consolidation. Consolidation on a bigger time frame. Once they do that, you go to a bigger time frame. What do you think they're actually doing here? Consolidating, accumulating. For the bankers, they're accumulating. For them, this is a day chart accumulation. Go to the day chart. Very simple. They are accumulating trades. You want it on a different time frame? Here is it. They move the market up and they accumulate trades. Spike down, spike up, spike down, spike up, come back down and move the market away from the zone. This is the accumulation. You don't want to be in the accumulation. If you want to be in a trade, you want to be in a breakout trade. It doesn't matter what time frame you're looking at. You want to be in the breakout. A breakout, a pullback to the zone. You see the breakout, pull back to the zone. If this was a 10-minute chart, that's exactly what you're looking for. A consolidation, a breakout, a pullback, and then you take the trade. So do the fibs work? Let's fib it and see if the fibs work. So we put a fib from here to there. That is where you're working. When you hit 618, you want to take your stops. You want to be out of the market, right? This is a 618 for this one. But let's look at this trade. This swing hand low. See that? 618. You want to be out. This is your trade. Your trade should be from here to there. You take most of it out and you leave the rest to run. 80%, 20% if they go. 80% you take out, 20% if they go. Right? You move your stop if they go. You don't want to risk it because rarely you're going to find that the 1000 fib is where they go or the 1270 fib is the target. You're going to rarely find that. This is a very impulsive move. See that? If you were trying to catch trades, if you're a long-term trader and you're trying to catch trades in here, position trades in here, they will take your stops. So if you're trading short-term, there are a lot of this same pattern that I show you here. You're going to find them in every one of these movements, which is what we can do. We can go here and take it to 10 minutes. chart won't take us back so far. Sorry. We won't see that in a 10-minute. We have to see it on this pattern here. So let's move to silver. Okay, let's go to the silver. I'll just take everything out very fast here. Time frame. We'll look at two charts more very fast, silver, euro, and then I think we'll have to run up. We'll be running out of time, right? Let me go to next silver. This is silver very fast. This is what I see in the silver market. Silver is bouncing off this trend line. Bouncing off the trend line. We are in an up move, and we are making corrections right now, right? This is a daily chart. They're bouncing off here now. So what you want to do, if you want to be a buyer in silver, if I want to be a buyer in silver, I start buying silver above this trend line. What is my target? 618, right? So if I want to start buying silver, I want to start buying silver from above here all the way to the 618 target. That's what I'll be looking for. If I want to sell silver on the break of here, I want to sell silver down back to this level. We took out the this 50 fib, we took out the 618, I want to be here, right? That's a long-term. You can trade in here using the same fib, using the same strategy on a shorter term frame, right? But really, unless you have a very huge account that can hold stops, you have to be careful of these spikes and everything, right? So we bounced off the 500 and we are going up. Came back, break that trend line, we're coming to this one. So let's watch this trend. And right now I'm not even trading silver. I'm just waiting for it to make one out of those two. Out of there, the top or the bottom before I go. Let's look at, there's a question there. For daily trading, which type of charts are suitable? Hour, 10 minutes. And for daily trading, I think the hourly is the maximum you want to trade. You can go to the 15 minutes and the 10 minutes and 5 minutes. Those are very short-term trades. You're in and out of the day. You're in and out the same day. Those are the time frames you want to trade. Those are time frame I trade when I should very short term. Unless I'm looking at something that's going to go longer, I get into the hourly charts. Maximum 240. You do all the work in the 240 charts, but you come down back to the lower time frame to trade. Let's look at euro. Euro surprisingly is in an uptrend, right? The pound is in a downtrend, but the euro is in an uptrend. What is euro pound doing? It's skyrocketing to the upside. So let's look at this. We have an uptrend, well-structured uptrend. We have an up move here, an ABC correction, and we are going up, right? We are still in an uptrend. What's the target? We took out the 270. What's the target? 618. Question: can we get to 38.58? Well, let's see. Today we are here. Today is what day? We'll all see whether the market changes structure or it continues that upside. Let me take some of these trend lines out so you guys could see too many of them here. See the structure of the market, and then we will see whether the market is going to turn or it's going to get to that target. Remove and remove this one, right? This is what we're doing right now. An up move, consolidation, an up move, right? So this up move is still going. That's the target. Do we have consolidation in there on a lower time frame? Very much so. Consolidation, up move, consolidation, up move. What are we doing right now? Consolidating. Go to the 60 minutes. And we can fib these. Every time we can fib them. Let me go back all the way back and start using this fib. 1 second, let me pull back from level so that we can fib 240. Go back to the 240 charts. We're going to run through these very fast. If you guys are interested in all of this, we will do classes on them, right? So this was, I'll start with this swing high, swing low. This was a swing high, swing low. We pull back to the trend line, 786 fib. What is our target? First target, 270. Second target is what? 618, right? First target, 270. Second target, 618. Where are we? 618, right? So right now we're consolidating, right? We can fib this, and then where is the 1270 target? At the bigger 618. So let's go to the 60 minutes now and do that the same thing on a lower level. So we'll look at the very last piece. Last swing high, swing low, which is the very, very last one on the 60 minutes. That's this one. Swing high, swing low. What are we looking for? looking for a fib pullback, probably a deeper fib pullback, maybe to this level. I'm thinking this level, if we get it, because if you pull a single line trend line, you will see that that's a possibility there, right? What target on a shorter time frame? 618, right? So if you're looking for this trade, you're looking to go to that target, right? That's how you're going to trade. What am I looking for? I'm looking for this very short so that you guys could see what I'm looking for. Let me just pull a single line trend line across here. And I want to pull one across here. Oh, sorry, not that one. Let me just pull this back. We got a bounce off this line here, right? I want to see, remember consolidation, they're going to make spikes up, they're going to make spike down, they're going to spike back up, right? I want to see a clear break of the top. If I'm taking it from the top, I want it to break out of the top, go a little, pull back to the top, and then I'm in that trade. 618, that's my target. This is my daily trade if I'm going to trade this. My stop will be here. If I get a pivot here, my stop will be here. See that? That's a trade. That's the way you trade it. Look at this. What we have. Divergence. What are we looking at here? Divergence. I want a deeper pullback when we have divergence to this trend line. I respect of this trend line, and then I got a better trade up to the 618. My pivot point is here. My stop should be under this pivot. Right? Any questions? Which are suitable tool for finding direction of market and pull back to limit? Suitable tool for finding direction of the market. That's understanding the structure of the market. Elliott wave. The direction is very simple. Let me just show you guys this. It's not easy. I'm going to remove everything. Go on the 240 charts. You don't need anything. Where are we going? Up or down? Everybody could see it. You just type U for up, D for down. Where is this market going? Up or down? Just look. You don't need anything. No tools, anything. You look at the market is going up. Very simple. The market is going up right now. Right? You don't need anything to see that. You can see that the market is going up. All you need to do, you want to find a place that is very good for you to buy. You put a single line. They will come back, a possibility to retest that line. It becomes an equilibrium point, a point they will bounce off of every time. If they break that line, what you want to do? You want to be a seller. If that line gets broken, you want to be a seller. You don't want to be a buyer below that line, right? So what you're going to look for, you put a fib like this, and this is all you need to do. Put a fib from here to there. Simple. Give me a 382. Pull back to the 382 in the trend line. A 382 in the trend line, and what we got? We got a trend line trade to the upside. Now, it's more complex than that. It's not as simple as that. It's more complex. I'm going to watch this. The volume in the MACD will tell me what level. This is a third wave or a C wave we're building here. See this? This shows you that there's one wave in there, there's a next wave in there, they're going to get a pullback, and then they're going to make a fifth wave. If this is a 1, 2, and we're in a third wave here now, I'm not sure that is finished. There may be one more impulse in the third wave before we come back to the line. The third wave, you will want to look for divergence in the fifth wave. Let's not go into that. That's a very complex thing. So reading the MACD with the Elliott waves, the fibs, and the trends. That's a whole 2-3 hour class that we will have to do a number of times before we can get that very clearly, right? Pivot points and retracement back to the equilibrium level and a horizontal frame, which is what we're going to look at also. Do we have more time, Max? I'm not sure. It's 21:51. We have. I'll leave the 10 minutes for Max to end up. Guys, if you're interested, we can do a lot of these classes where we're going to look at these, study them, teach them. I'll be posting out heads up for you guys if you're interested. See what I see in the charts. You look at them, see if you see the same thing. And, you know, but you may have to be only for subscribers to this platform. I think that's the only rule Max has. So, Max, I'm going to hand it over to you.
Thank you very much.
You have only 10 minutes remaining.
Yeah. Thank you very much, Anil. Well, what I can say is exactly what we'll be doing is we'll be hosting private classes with you to go over these trades on a daily basis, I would probably say, if there's enough interest. So what I'll do is I'll send you guys all out an email with a small poll asking you if you thought it was useful, a couple quick questions if you don't mind answering that, and we can put together a subscriber list basically, and bounce some ideas back and forth. We have great technology. We don't always have to use the GoToWebinar tool, but it's good for people to sign up. We'll create a forum, a trading room, where everybody can come and leave comments at any time, come and go. One will be for subscribers only, however, so if you're a client of Everest Markets already, or if you want to sign up, as I went through before, we can do that. Let me just take over the screen here.
Max, 1 second before
Yep.
before you take over. I'm leaving my Skype for those guys who, anybody who's interested, you can contact me on Skype. My Skype ID is Mangal457. Right? Or you can type it on if you want. I typed it here. If you're still in my charts, you can see it. Mangal4, that's my Skype ID. So you guys can add me to Skype. I'll create a Skype group where I'll do postings of what I see. And if we have enough people interested, Max, you may want to consider opening a London room. During the London trading hours, we can open a London room where we can identify trades, possible trades, you know, on a live time frame, not afterwards, on a live, you know, while it's happening.
Yeah, that'd be the plan. Let me just change the
okay. Thank you. Thank you. Yep.
Back to me. Here.
Okay. Thanks everyone. Bye.
And we will just go back here, and I'm going to share my screen. Okay, so we went over some of the basics here. As we said, we would be going over some additionals later on. I know I just left your microphone on. Guys, if you have any questions, this is the time to make them. So we've got some questions coming in here. Does the USD JPY pair follow the same pattern? I don't know, Anil, you're still there, right?
USD JPY, yes, it does. Max, can you give me back the screen for 1 second? Let me show them this chart. I think this is going to freak a lot of people out when I show them this chart. Okay. USD JPY. Let me see. Is my screen on?
Yeah, your screen is back on.
Can you guys see?
Yeah.
Follow all the charts. This is a daily one. This is a daily forecast we made. Wave 1, wave 2, wave 3, wave 4. Anybody see this wave 5 happening? That's a forecast we made. It is going to go at least to the 618. Remember, 618 is my target, right? Anybody see that happen? Well, it did, right? That's something, you know, that's not tradable. Remember, these things are not tradable. It's not as easy as it looks, right? These are forecasts. You do forecasts, you look at the market, you try to figure out where you think the market is going to go. And then you go back and you trade on your lower time frame. But these are forecasts you need to do so you have an understanding of what you think the market is going to do. Here is the next yen, very small one that we did. Sorry, the same one. Let me look at it. There's the next one that we did in a pattern. We would do these patterns as well, these very advanced patterns. Actually, this is not a crab, this is a bat pattern. By mistake, we wrote crab pattern here. It's a turning point. It's a Fibonacci turning point, and this thing is already fulfilled its thing. It's already way up at the top here, right? Over 91. It's already there. We are topping out on the JPY. So the very same thing in all time frame, it does the very same thing. It doesn't matter. Let me go to look at the yen pair right now. 1 second. I'll do this very off of time. Running out of time. And this is my JPY chart. If you look at it, it's already prepared. I'll go on a 240. And this is what you want. You see that? Don't rush the charts now, right? They're coming to this thing, down, back, up, down, up. Well, what happened here? See what happened there? There are two things you can understand in this structure. Either the power of the yen is so strong they're not going to retrace. They're going to go out of this thing and come to here. If they break out of this trend line, it's going to be very impulsive. So you want to look for the move way up to this top here, way up to that level. You want to look for that move if they break out of this channel. If they don't break the channel, what you want a pullback. If you see they're having problem, and we can see that here already, right? You want to pull back from there all the way back to this trend line, way back to this trend. And here is where you're going to test the trend line move, back to the upside. So in that case, you get a sideways move here, right? And you're going up back there. Do they do that very often? Okay, look at the bottom. I'm going to go over the very bottom of this chart very fast and show you this. I'll have to go to a higher time frame probably. Have never says to low. It's way lower. If I can bring that way lower, bring that chart. Oh, that's the third wave. This is the fourth wave. You're looking for the fifth wave here. Let's start it here. Let me just pull this up like this. And you're going to see when they break out of those little channels, how impulsive they go. This was the channel they were doing very clearly. Everybody can see that. This was the first wave up. They pull back, and then they make a 3-wave up for this 5-wave up for the third wave. Pull back, and look what happened when they break here. Test the channel. Remember this on a 5-minute. We were looking at a pound. They will break. You're looking for a test of the channel there. Then the impulse goes. The impulse goes. Come back, retest the channel, and then it goes. It's an all-time frame. Let me put film on so you can see. Let's flip this leg from here to here. This is not the one you're going to trade. You're going to be trading on the lower time frame, and you're going to fib in this leg. These legs you're going to be fibbing. But just to show you that the fibs work on all time frame. 270, This is the one when you get the 20% to run, because it can run all the way to probably the 2618, the minus 260. So now we are actually having some. I think it's about time they make some corrections. It's about time they did, on the daily. If you look at the daily, it's about time they make some corrections. Right? The daily, out the 618 here. We are going to the 1,000. Very close. We are very close to this 1,000 target. This 1,000 target. This 270, and this is a 382 monthly retracement stop there. So if we get a pullback here, they can continue to that 618 down here and then there. We can look for that if they want to continue that move like that. Okay.
Yeah.
Max,
Okay.
I'm handing over back to you.
All right. Thanks very
much.
Any
more questions?
I'm just looking again coming in. We don't have any more questions that are coming up through the system. We've got a couple people drop off now. If you have any questions, as I said, we'll create a group. And what we'll do is we'll also send up a follow-up email to all the attendees with the group information and any other questions they can send to us. But I think it's been a very good first webinar. So thank you everybody for attending. And if you have any questions, please don't hesitate to address them to us via email, info@everestmarkets.com. You'll find more information about our firm if you're not already a client at everestmarkets.com, and the conditions that we can offer you as traders in the market. And once again, thank you very much, everybody. And thank you, Anil.
Okay, thanks. Thank you, Max. Thanks, everybody. Bye.
Bye. Bye.